Greetings, everyone. This is David Littlejohn with your weekly market wrap-up for November 3rd. It's a little after 3 p.m. And once again, the markets have finished in nosebleed territory. The Dow Jones Industrial Average finished at 23,539 and some change. S&P within a point of its all-time intraday high at 2,587.84, and the NASDAQ also within about a point of its all-time highs at 6,764.44. The big story of the day, of course, Apple crushing it and climbing higher as now the largest company in the world and so forth. And then the other talk of the town is the Trump tax plan. I've had a lot of people asking me what I think this is going to do to the stock market. And it's a lot of unknown yet, so it's too early to call. The preliminary draft, if it were passed tomorrow, would likely impact the housing market and the real estate environment the most. And it would probably be a generally okay sign for the stock market, probably. But again, very preliminary at this point. So everything that's in this tax plan has to get put through the Washington, D.C. meat grinder to see what actually comes out the other side. So once the lobbyists and everybody else get to chip in on this thing, I think what we see will be some twisted version of this. Folks have been asking me if they think the 401k deduction is going away. I think that the probability for that's pretty low. The discussion about whether or not mortgage interest rates are going to be deductible going forward. The discussion currently is if a mortgage is higher than $500,000, then you would not be able to deduct the interest. That is in flux. So before you get too excited about it, I would say let's just take things with a grain of salt and see what happens. So far, the stock market is priced in relative stability in the expectations. Corporate earnings continue to be solid, and the overall economic picture looks good. This is not necessarily in concert with the way people feel, right? A lot of people tell me how they feel like things aren't very healthy right now, but the data does look different. The data overall looks pretty strong. I would say that there's probably as much political dissonance as there is anything else going on right now. If I just had to call it from where I'm sitting, it looks like people are saying, well, gosh, we're sure divided between the right and the left, Republican or Democrat, conservative, liberal, however you want to slice it. That divisiveness translates to feelings of discomfort. Both sides can come up with reasons that this market should correct, and yet if you look at the data, there are still just as many reasons to say the market could continue to expand. As always, we remain data dependent. The signals that we track and the various trading algorithms that we utilize within our systems continue to show green lights. That doesn't mean that everything is hunky-dory. It just means that nothing has violated the process that we utilize so far, which means that as far as a risk-on, risk-off trade, still risk-on. If you have more questions about this, I would encourage you to reach out and talk to us. You can call our office at 541-375-0898. You can send us an email at info@littlejohnfs.com, and you're welcome to visit us on social media as well. We'd be happy to take your questions and respond appropriately. As always, please don't view this specifically as investment advice. This is just us talking about where we're at in the markets, but the door remains open, the phone remains open. We'd love to speak to you about any of your concerns. Please share with a friend, like the video below, and we will catch up with you very soon. Until such times, this has been David Littlejohn saying, don't forget, this weekend is daylight savings time, so fall back, and we will catch you next week. Take care.